Good morning, traders. Today is July the 5th. My name is Neville Hornsey, market analyst for YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How you doing?
I'm good, man. I'm good. I mean, I don't know about you. Did you watch the football?
Yeah, definitely. Looking forward to tomorrow.
Oh, cannot. Well, Wednesday.
Yeah. Is it Wednesday? I thought it was Tuesday night, right?
Tuesday is Italy, Spain.
Okay, cool. I was getting too excited.
No, I'm going to Wembley to see that.
No way.
Italy, Spain, yeah.
Brilliant. That's good.
Yeah. I mean, the England tickets were like so expensive, but the Italy, Spain ones weren't too bad. So I was just like, do you know what? Why not? Once in a lifetime, potentially.
Yeah, without being biased, like saying England's good, but Italy, Spain are probably the best. So yeah, you're definitely going to see a good match. Yeah, but
definitely.
We had an amazing job number, I reckon. What do you think?
Yeah, I mean, what was it? 850,000. Expectations were for about 700,000. So very good, very good. Not too good, so that markets get worried that the Fed might start tightening. Because, like, imagine if it was 1.1 million or something. That'd be too good, and then you would have probably seen stocks sell off. Yeah. So yeah, very much a Goldilocks NFP number was the way that a lot of banks and stuff have been framing it. So very good for risk appetite, generally speaking, which is probably why you saw stocks doing well, the dollar declining a little bit.
Yeah.
Although, I mean, the unemployment rate rose a little bit, which is a little bit concerning. But yeah, aside from that, like you say, good data.
Yeah, and the reaction in the dollar was quite interesting. You've just got above a trend line, we're above the 200-day moving average, and then it's like fall off. So how do you square that with good fundamentals, weaker dollar? Profit taking or something else?
Potentially, I mean, potentially profit taking, potentially risk appetite. Like if you saw strength in risk assets and maybe a bit of a weakness in safe havens like the dollar. Yeah. Although personally, I think in the long run, like in the medium term, as long as the data continues to show strength and we continue to move towards Fed tightening, which it looks like we will, I can't imagine we'll see any pullback in the dollar that's too severe. Do you know what I mean? I think there'll be appetite to be buying the dips for the dollar.
Yeah, because I was just before the NFP, obviously, talk of maybe a euro dollar shortage, as in the sort of offshore dollar, that was maybe bidding up the dollar. Then there was obviously the widening trade gap. That's obviously bearish for dollar. So yeah, it was interesting for me to see, the reversal at a key resistance level, I guess, the trend line for me. But yeah, we'll have to wait and see. I think buy the dip at the moment. What else we got? Right, so we've got OPEC still going on.
Oh God!
Just
it's Saudi. It's all of them led by the Saudis versus the UAE apparently, and they're just bickering about how the production cuts are sort of calculated. Like, what's the baseline? And everybody, apart from the UAE, wants to continue to use that 2018 baseline, whereas the UAE is saying it's out of date, and it shouldn't be as much of an issue as it is, really. Yeah. But I guess there is a risk that we could see, because these cartels are fragile, so potentially we could see a bit of a breakup. There's a tail risk of that potentially, which would be bad for oil.
Yeah, they seem to from what I can gather as well, obviously the Iran oil could be coming online in the next few months. Now we've got through the election, so there could be more. Iraq seems to have more to give as well. But
Venezuela too. Venezuela's always an X factor. Yeah,
and then the demand with this, even the guard last week was saying how the Delta variant is going to add risks to the market for a while longer.
Yes.
So I guess demand versus supply could be out of balance if they were to keep.
Yeah, I mean there are still downside risks to these expectations for the recovery in demand, pretty much. So whilst I think the recovery in demand is going to be really, really strong, because I don't actually see any of those downside risks materializing, like with the Delta variant, it's still a risk, isn't it? So
Yeah,
most of the OPEC guys wanting to be more cautious, and basically the UAE just want to start pumping. So just going to have to keep eyes on the news, I think, and just see what happens with that.
Yeah, looking at the chart, it's just super bullish. We haven't. I don't think we've got to that 20. No, we haven't got there yet, have we? We're pretty close to the 2018 swing high now, though. So that's one that we've been.
I'm sure it'll get there.
Well, I think credit to us both for being, I don't know, just following the trend, I guess. it just seemed like the most obvious place for it to go.
I know. It is. You just, to be honest, well, I mean, now we're approaching that target we've been talking about for a long time. My conviction is sort of waning a little bit, but like, it's been one of the easiest trades. You know what I mean? It's been such a high conviction trade. Everybody's been saying oil to go higher, and fundamentally speaking, things have been so bullish. It was almost like, why weren't crude prices higher? Over the last couple of weeks, and now they get into the place where I feel like they should be.
Yeah. Okay. So we talked about the dollar. This is the trend line that I was talking about, where we took through the swing highs here, and then it sort of just reversed. A big bearish candle last Friday, and take out that Friday low, then go and test this 200-day moving average. But that would be good for the oil, wouldn't it? Like a lower dollar. So
it would.
Dollar CAD.
But
not so good for dollar CAD though. Well, depending which way you look at it.
Yeah, I mean, it's mixed, isn't it? Like oil is great for CAD if it continues to go up.
Yeah, and I've obviously got this little balance area here from March all the way through to end of April, where we found resistance, compressing end of the 200-day moving average. The stochastic is coming down a bit lower, so a close below the swing low from late June. That could confirm that lower low, but until then, not so much. But how do you think about the? Because we've got
jobs on Friday.
Jobs on Friday.
Canadian jobs on Friday. I mean, I think Canada's been hit with these coronavirus restrictions recently. So I need to check what the expectations are, but I don't think there's expectations for like a strong number like we just saw in the US. But that isn't going to be a problem for CAD, because like I say, everybody knows there's been these restrictions. Nobody's expecting jobs gains when the country's been in lockdown. The economic gains and the gains in the labour market are going to come in the second half of the year, once the Canadian economy properly reopens. And for me, I think that should be supportive of CAD. The Bank of Canada is positioned towards the front of the queue of the central banks that are going to hike. So it's going to be one of the earlier hikers, probably, potentially ahead of the Fed. Crude oil prices are doing well. I think the outlook for CAD is still pretty good.
Cool. All right. Another commodity pair then, the Aussie dollar. Last week I sort of described a potential head and shoulders breakdown of the neckline, looking for a target back down towards the October 2020. October, November 2020 sort of zone. That reversal in the dollar index might scupper that idea. But I'm not worried. Yeah, I'm not worried until we get above the swing high from late June. For me, at the moment, it's still making lower lows, lower highs. So, we've got quite a lot of Aussie data, haven't we? We've got RBA.
We do.
How do you feel about this commodity pair?
Yeah, I mean, it's quite an interesting RBA meeting. They've got to make some decisions, pretty much all surrounding their QE program. Do they extend their yield curve control to the next dated bond, 3-year bond? Do they continue their QE at the current pace, or do they slow it, or what do they do with all that kind of stuff? I think we could see the reaction to that could go either way. And then what else have we got for Aussie this week?
Just RBA.
That is the main thing this week for Aussie. Yeah. Other than that, I think it's the usual thing for Aussie. You've got to keep your eye on risk appetite, which remains pretty good.
You're going to use
prices.
Commodity prices.
Yeah, commodity prices. And the big thing for the Aussie is metal prices in China, because that's where they send all their base metals. And obviously base metals prices had been hit in recent weeks by this China crackdown, and that's definitely weighed on the Aussie. So these are all things to be watching going forward.
Yeah, I think that boat's definitely sort of turning slowly towards the downside for commodities, isn't it? Like we've had lumber come right off, copper's come off, all the sort of things that we were talking about a few months ago with the reflation and the higher inflation expectations. It's kind of.
I mean, all those commodities like lumber, like you said, the gains in them were just they were like meme stocks, weren't they? They were just going
There's
crazy.
Warren Buffett. He said he's like one of the biggest house builders in the US, isn't he? And he said that 30% of the cost, the new higher prices was through the lack of commodities that you could get hold of, like lumber.
Yeah.
And the fact that it was really expensive to buy if you could get it, and that was kind of pretty much the top. Just like after he gave out that sort of little
Buffett, classic Buffett.
Yeah, just like that was the top. But
always gets it right.
Yeah, but I guess he'll be happy now that house prices in America is still going up, but people are still moving. But obviously, house builders will be able to profit because they'll be able to get cheaper materials.
Yes,
so that's good.
That's a good point.
But yeah, Aussie, China, metals not so good at the moment. And I still think this comes down lower, even if it's only to test the swing high from September 2020. I don't see this little balance area here, 0.74 being the end of this move. Because it's all, maybe it's just too obvious. I always think the most obvious trade is the one that you take, and the break of this support line is just the obvious. All right, so that's kind of it, really. We have to wait for the rest of the week to actually now pan out.
Yeah. What else have we got? Have we missed anything? I think we've pretty much covered everything, really. G20 meetings at the end of the week might be worth watching.
FOMC?
FOMC minutes, US ISM services, PMI. Yeah,
that's pretty much I don't think that's going to change. I don't think that FOMC is going to change much from last month.
I doubt it, but it is going to be an interesting one because obviously we did have that hawkish shift. So it'll be interesting what the hawkish people are saying at the FOMC versus what the doves are saying. And it's just been good to see what the new dynamic is.
Yeah. Do you reckon they'll walk back some of the hawkishness?
No. I think the minutes will probably be hawkish to reflect the more hawkish dot plot, basically.
Yeah, okay.
Yeah.
But we'll keep an eye. Well, yeah, because I guess I've still got the FOMC candle back here, 16th of June.
Yeah.
Never got to test the bottom of it. I always thought that would be tested, but never did. Maybe. We'll just wait and see. But yeah.
You see, those technicals are looking like it could happen.
Yeah, I mean, on the euro dollar, I've marked out a divergence between the stochastic and the price action, and I guess you could say on the dollar index, got rising highs on the price, but not on the stochastic. And for whatever reason, that sometimes works out. So maybe there's a drop in momentum here, and we do come back below that. Okay, well, we'll wait and see. Obviously, take it easy. I hate FOMC weeks.
It's just minutes. It's just minutes.
I know.
The markets, I know what you mean, because markets are so boring until FOMC.
Yeah,
but this is the minutes. It'll be fine. It will be normal. When the US guys come back tomorrow, it'll probably be a bit choppy.
Yeah, exactly. Yeah, I'm going to go fishing. Right. Have a great week, and
you too, mate.
I'll catch you next week.
Bye.
Bye.